The same month, one company's chips were worth nearly $5 trillion. The video game industry booked the single largest layoff in its history. I'm Uriel on the BTG desk, and tonight's brief is one of our own traders' reads, Blessed, who's been calling this for a while and watched the tape start proving it in real time. The call is simple. This is the great reallocation. Capital, talent, and attention are draining out of entertainment, games, movies, apps, and getting shoveled by the $100 billion into artificial intelligence. AI up, entertainment down. And for once, you don't have to take anyone's word for it because it is printing on the tape. Stay with me because I'm going to walk you through 4 collapses and 1 explosion. The largest gaming layoff ever. A Hollywood shedding jobs by the tens of thousands. An app economy shifting under your thumbs. And a wall of money that all went to the same place. Then we read the actual prices. Sony, Microsoft, NVIDIA, and I'll show you the one number that tells you whether this is a healthy reallocation or a bubble about to ask a very hard question. Start with the event that made us record this. July 6th, Microsoft took an axe to its Xbox division, cutting as many as 3,200 jobs, up to 20% of the entire gaming unit, and spinning off or selling 5 studios. We are talking about names gamers know. Ninja Theory, Undead Labs, Compulsion, Double Fine, and Arcane Leon, the studio behind Dishonored, reportedly facing closure, with a Marvel game canceled outright. Bloomberg, CNBC, and Variety all put numbers to it, and industry veterans called it what it is, potentially the largest single gaming layoff in the history of the business. Now here's the detail that turns a sad headline into a market read. Microsoft did not do this because it is broke. In the very same fiscal year it is firing those thousands, the company is spending north of $100 billion building artificial intelligence. Read that back. The money to fire the game makers and the money to build the machines is coming out of the same treasury. That is not a cost cut.
That is a reallocation. And Xbox is the first body on the floor. And it is not just Microsoft. That is the whole point. Over at Sony, PlayStation quietly shut down studios, Bluepoint and Dark Outlaw among them, and took a write-down of roughly $765 million against Bungie, the studio it paid $3.5 billion for just 4 years ago, after Bungie's big new game, Marathon, launched in March, and the audience walked away. Sony's own gaming segment booked a 50 billion yen charge tied to game development costs it had already banked. Then, the biggest one of all. Electronic Arts, the publisher behind Madden and Battlefield, is going private in a $55 billion buyout led by Saudi Arabia's sovereign wealth fund, Silver Lake, and Affinity Partners. That is the largest leveraged buyout ever recorded. And when you take a company private on that much borrowed money, the math is brutal and automatic. The company's cash has to service the debt. So the cuts are not a reaction to bad performance, they are a contractual obligation. EA has already run 3 separate waves of layoffs this year, and the people inside the industry can feel where this goes. At this year's Game Developers Conference, the official survey found 52% of developers now say generative AI is having a negative impact on their field, up from 30% a year earlier. 3/4 of the students studying to get into games said they are scared there won't be a job left to get into. That is a field diagnosing its own condition. Now cross the street to Hollywood, because the same current is running there, colder and quieter. The domestic box office last year came in around $8.9 billion, still far under where it sat before the pandemic. Roughly 17,000 entertainment jobs vanished last year alone, and Los Angeles County, the physical heart of film and television, has lost around 41,000 production jobs in 3 years. That is 1/4 of the entire entertainment workforce of the city, gone. Here is where AI stops being a metaphor and picks up the tools.
In March, Netflix bought a company called Interpositive, an AI filmmaking outfit founded by Ben Affleck, for roughly $586 million. What does Interpositive do? It automates color grading, relighting, and continuity fixes, the exact frame-by-frame work done today by thousands of artists in India, Korea, the Philippines, and Latin America. One study cited across the trades estimates as many as 118,000 entertainment positions could be hit within 3 years.
Studios, in the words of one report, are using AI to smooth the rough edges and keeping very quiet about how much. The Reallocation has a post-production department now. Fourth collapse, and this one is happening under your thumb. For years, the whole digital economy ran through the app. You had a problem, you downloaded an app. Watch what is cracking. ChatGPT used to own 67% of all AI app downloads on the planet. This year, that fell to 47%. Not because it shrank, but because the field exploded around it. Claude's monthly users grew more than 600% year over year. And underneath the whole App Store, 78% of apps launched since early last year have fewer than 1,000 downloads. Launching got easy. Getting used got almost impossible. The deeper shift is what replaces the app. OpenAI and Google both rolled out agents this year. AI that does not sit and wait for you to tap it, but goes and runs the whole workflow itself, chaining tools together on its own. When the thing you ask can just do the task, you stop opening 5 apps to get there. That is not a better app. That is the beginning of the end of the app as we knew it. And it is why the smartest money stopped valuing just another app some time ago. So 4 things are contracting: games, film, mobile, and the old app economy. Now follow the money out of them, because it went somewhere very specific and it left a trail a mile wide. NVIDIA, the company that makes the chips this whole thing runs on, hit a market value of nearly $5.3 trillion this spring. Put that in human terms.
On the day ChatGPT launched, back in late 2022, NVIDIA was worth about $400 billion. It has since risen nearly 12-fold, 12 times its size in a little over 3 years on one single bet. And the bet keeps getting funded. OpenAI raised $122 billion this year at a valuation around $852 billion. And by some estimates, the paper already trades above $1 trillion. NVIDIA says the big cloud companies will spend on the order of $1 trillion on AI infrastructure next year alone. So when you ask where the money that used to build the next great video game went, this is the answer. It went into the machines. That is the other side of the ledger, and it is enormous. Now the part the desk lives for, the actual prices, because a thesis you cannot see in the tape is just a story. 3 reads, and these are levels to watch, never advice to take. Sony. The stock is trading around $21, sitting right on a 52-week low near 19, down roughly 20% on the year. Its market value down to about $123 billion. The company that gave us PlayStation is trading like a company in retreat, because in its gaming division, it is one. Microsoft. Here is the tell of the entire reallocation in a single chart. Microsoft is spending nearly $190 billion this year on AI, and the stock is down about 20% on the year, well off its high above 500, even as it cuts 4,800 jobs. The market is watching a company shovel its own furniture into the AI furnace, and it is not yet convinced the fire pays off. Almost the exact same slide as Sony, but for the opposite reason. Sony is down because it is losing the old game. Microsoft is down because it is paying right now, up front, to win the new one. And NVIDIA, the winner, the 12-bagger, the $5 trillion giant. Here is the number I promised you at the top. In a matter of weeks this summer, NVIDIA slid about 16% off its peak. Roughly $1 trillion of market value. Gone. Bloomberg clocked it on July 8th. $1 trillion. Evaporated. In weeks.
From the single most important stock in the whole reallocation. So sit with that, because it is the honest heart of tonight's brief. If AI is eating everything, why did its own champion just shed $1 trillion? 2 answers, and the desk holds both at once. The bull case is real. The demand is genuine, the productivity is genuine, and locking in scarce computing power years ahead is strategy, not panic. This is a true reallocation, the biggest movement of capital and talent in our working lives, and being early to it beats being right about it too late. The bear case is also real. A lot of this money is circular. Chip makers investing in the very customers who buy their chips, Valuations running years ahead of profit, a parabola that looks an awful lot like ones we have watched end badly. That $1 trillion slide is the market clearing its throat. Here is how the desk squares it, and it is the one line to take away tonight. The reallocation is real, and the parabola is asking a bubble question at the same time. Both are true, which means the trend is your friend and the entry is your enemy. Do not confuse being right about the direction with being safe about the price. So what do you actually do with a read like this? First, understand these are mostly not stocks you can press. OpenAI is private, Anthropic is private, but the whole structure has one public pressure gauge, and it is NVIDIA. The desk watches it as the bellwether. The first crack in AI story, a renegotiated commitment, a data center that slips, shows up in that one name before it shows up anywhere else. Levels to watch, not advice to take. Second, if you build, and a lot of our community does, the lesson of tonight is the cleanest it gets. AI is the shovel, not the gold. In every gold rush, the reliable money was in the shovels. And even then, not every shovel maker survived the crash. Own the tools, stay flexible, and do not fall in love with any single name in a field where this week's leader is next week's discount. And third, if you trade the theme through the public names that touch it, respect the trend and respect the wobble in equal measure.
The reallocation earns you the right to be interested. The $1 trillion slide earns the market the right to shake you out first. That is the call. 4 industries in retreat, one wall of money that explains exactly where they went, and a set of prices that print the whole story if you know how to read them. Games gutted, Hollywood shrinking, the app economy shifting, and nearly $1 trillion a year marching into the machines, with the market's own champion reminding everyone this very month that no parabola climbs in a straight line. Blessed made this read before the tape agreed. Now, it is agreeing. When the next crack shows, we cover it the same day, right here. So subscribe and turn the bell on to catch it. Nothing tonight is financial advice. It is one desk's read of public numbers. And we showed you where every one of them came from. Bloomberg, CNBC, Variety, the developer's own survey, and the tape itself. Trade your own plan. We'll see you at the next brief.